Every country on Earth is in debt. But have you ever wondered who actually owns this debt, and why it seems impossible for nations to ever fully pay it off? Today, we are going to uncover the dark, hidden system behind global debt, a system that has controlled economies, governments, and even the lives of ordinary people for thousands of years. The origins of debt. Debt is older than civilization itself. In ancient Mesopotamia, around 3000 BCE, farmers borrowed grain or silver from temple authorities or kings. If they failed to repay, they faced imprisonment or their families were forced into servitude. Debt was not just financial, it was a tool to maintain social hierarchy and political control. As centuries passed, debt became increasingly institutionalized. In medieval Europe, moneylenders charged extreme interest rates, sometimes up to 50% annually. Nobles borrowed money to fund wars or extravagant lifestyles, often plunging peasants into unbearable financial burdens. Revolts against debt were frequent. Even ancient Rome was not immune. When citizens fell behind on loans, they risked imprisonment or even death. The empire frequently faced social unrest fueled by unpaid debt. Debt became a central part of governance, law, and social order. This history shows that debt was never simply about money. It was about control over individuals, communities, and nations. Fractional reserve banking and the birth of modern finance. In the 17th century, a revolutionary system emerged, fractional reserve banking. Banks discovered that they didn't need to keep all deposited money in vaults. Instead, they could lend multiples of deposits, creating new money in the process. For example, if a bank had $100 in deposits, it could issue loans worth $900. This system allowed economies to expand rapidly but also created systemic risk. Central banks were then introduced to stabilize economies and manage money supply. The Bank of England, founded in 1694, was one of the first central banks. Its purpose was to manage government debt and issue currency. Later, in 1913, the U.S. Federal Reserve was established to regulate money supply and interest rates. But behind this facade of public service, these banks held immense power. The more debt grew, the richer and more influential they became. Modern banking relies on the same principle. Money is created from debt, and those who control the creation of money wield extraordinary power over nations. Government debt and national budgets today. Every government borrows money to fund its operations, but most of this borrowing doesn't go to public services like education, healthcare, or infrastructure. Instead, a significant portion is spent paying interest to lenders. The United States, for example, has a national debt exceeding $40 trillion. Hundreds of billions of dollars go each year just to pay interest. Japan's debt-to-GDP ratio exceeds 250%, yet borrowing continues. Greece's debt crisis after 2008 led to severe austerity measures. Pensions were cut, taxes increased, and public services slashed, while banks that lent the money were bailed out. Debt is more than a financial tool. It is a method of control. Nations dependent on borrowing must follow the rules set by lenders or face economic collapse. Debt shapes policy decisions, trade agreements, and even international relations. Who really profits from global debt? The real owners of global debt are often invisible to ordinary citizens. Investment banks, hedge funds, multinational corporations, and wealthy individuals hold enormous influence. Ordinary citizens contribute indirectly through taxes and government bonds without even realizing it. These players profit in every crisis. Recessions, wars, and inflation increase the wealth and power of financial institutions. For example, during the 2008 financial crisis, major banks were bailed out while millions of ordinary people lost homes, jobs, and savings. The system is designed to protect those who control credit, while those who are constantly burdened. Case studies from around the world. Let's examine some real-world examples. Greece. After the 2008 global financial crisis, Greece's debt skyrocketed. International lenders imposed harsh austerity measures. Citizens faced unemployment, reduced pensions, and higher taxes. Meanwhile, international banks that lent the money were protected from losses. Ordinary citizens bore the cost of financial mismanagement. The United States. Interest payments on national debt consume hundreds of billions of dollars annually. While the U.S. economy continues to grow, debt keeps increasing. Every new crisis adds layers of interest, creating a self-reinforcing cycle that benefits banks and lenders. Japan, with the highest debt-to-GDP ratio in the world, Japan continues to borrow year after year. Interest rates remain low, markets remain stable, but the government is trapped in a cycle of debt. This shows how debt operates as a system of control, even in wealthy nations. Debt as a tool of control. Debt is not just money, it is a method of influence and power. Countries that cannot repay face external pressure to implement policies that benefit lenders. Structural reforms, privatization of public assets, and trade concessions are often conditions for loans. At a personal level, debt shapes lives as well. Mortgages, student loans, and credit cards ensure citizens continuously feed the system. Multiply this by billions of people, and the network of control becomes global. Freedom is limited when every decision must consider repayment. Economies, governments, and societies are subtly constrained by the chains of debt. Historical connections to modern debt. Looking back, we see patterns repeated over centuries. Ancient Mesopotamia, medieval Europe, and Rome all experienced social unrest and collapses due to debt. Modern financial systems inherited these mechanisms, refined for complexity and global scale. Globalization magnifies these effects. A debt crisis in one country can ripple across continents, affecting trade, investment, and political stability. Modern debt is interconnected. The system benefits a few while creating dependency for the majority. Possible solutions and alternatives. Is there a way out of this cycle? There are approaches, but they require awareness and courage. 1. Debt forgiveness and restructuring. Countries like Argentina have renegotiated debt terms after multiple crises. 2. Alternative financial systems. Cryptocurrencies and decentralized finance aim to bypass traditional banking structures, offering more direct control over money. 3. Transparency and citizen education. Understanding how debt works is essential. Knowledge empowers individuals and governments to challenge systems of control and reduce dependency. While no system is perfect, awareness allows for informed decisions, potentially reducing the influence of hidden financial powers. The human cost beyond numbers. Debt affects real lives. Education, healthcare, housing, and social welfare are often limited by interest payments. Millions of families around the world live under the invisible burden of national and personal debt. Wars, poverty, and social inequality are intensified by financial structures designed to prioritize creditors. Understanding this human cost is crucial. Debt is not abstract. It shapes the quality of life, opportunities, and futures of billions. Global debt is more than money. It is power, control, and influence at an unprecedented scale. Every financial decision, interest payment, and bailout reflects the hidden system governing nations. Understanding it is the first step toward freedom. Debt has shaped civilizations for thousands of years and will continue to shape the future. But with awareness, knowledge, and informed choices, it is possible to navigate this system wisely. The dark secrets behind global debt are no longer invisible. Knowledge is power, and understanding the system is the first step to reclaiming freedom.